Most creators think their biggest problem is getting more views, subscribers, reach, more attention. What if that's not the real problem? What if the real reason most creators stay stuck isn't because they don't grow fast enough, but because when the money finally comes in, there's no structure to hold it, no system, strategy, no real business behind the content. What happens? You'll find that they start making money, but feel overwhelmed. They grow, but don't feel any fear. They scale income, but also scale complexity, stress, and risk. Eventually hit a ceiling, not because they aren't talented, but because they never made the shift from creator to owner. That's what this episode is really about. Today, you're going to hear from Philip Taylor, the founder of FinCon, who worked behind the scenes with hundreds of creators from beginners to top earners and seen where things break. Tax mistakes, hidden risk, missed opportunities that quietly cost creators tens of thousands of dollars, sometimes more. More importantly, how to fix it, how to turn content into a real business, how to build structure that actually creates freedom, and how to stop relying on the algorithm and start building something that lasts. If you're a creator or on the way to becoming one, this episode will completely change how you think about money, growth, what you're actually building. So let's get into it. Before we begin, quick disclaimer. Nothing in this episode should be considered investment advice. Results discussed have not been independently vetted. Any claims made by the guests have not been verified. The content is for educational purposes only. Views expressed by the guests do not reflect those of the host or this show. Hey guys, welcome to another episode of the Financial Freedom Podcast. I've got a Philip Taylor. He's founder of the FinCon conference. He's a CPA for financial content creators. Happy to have him on the show, talk about his journey, entrepreneurship, content creation. Philip, welcome.
Christopher, great to be here, even in the middle of tax season. Happy to be talking with you.
Introduce yourself and we'll dive into the fireside.
Yeah, man, I am lucky to have found myself to be an entrepreneur, but I didn't start that way. I followed my father's footsteps into public accounting, did that for a little while, then discovered that I wanted to do something on my own. I started a blog at ptmoney.com, run podcasts through the years. Masters of Money was probably my biggest one. Also founded FinCon. I was passionate about getting together with other financial content creators. That's why I started that event. I've been running that, the blog for a while, although that's coming down. Most recently, I acquired my family CPA firm. I got back into the business. Dad was retiring. I decided I was the best person to buy it. I decided that if I was going to run a CPA firm, it was going to be for the type of business owner that I understand, which is content creators, people who do podcasting, TikTok for a living, tons out there that need help. We're designing a unique service for them. That's the latest thing. I live in Texas, got a great family. I love playing golf.
What I love is you're taking content creation into your specific area of taxes, accounting. What are things that people need to know, whether a YouTuber, podcaster, if they want to be a content creator?
The first thing is treating it like a business. A lot of content creators come into it because they're passionate about a subject. They want to start expressing themselves on a platform. They think it looks fun. Hey, this might make some extra money. Maybe they start reviewing products, doing collaboration deals. Before you know it, they've got money coming into their personal checking account, overwhelming them. They don't know what to do with it, how our tax is going to work. Separate the business from the personal side. That's the biggest thing we see from a lot of new creators. They don't have that separation set up. Even businesses been around for 3-4 years, you still see personal and business meld together too often. Having that separate bank account, separate credit card for the business, having an entity set up like an LLC to fully establish yourself as a business, doing bookkeeping, whether you use one of the new online AI tools, QuickBooks, or hiring a bookkeeper. Keeping things organized, setting up the books separately, acting like a business versus a person just doing a side hustle or a hobby is the key first step to making moves or decisions after that.
Next question is the biggest money mistakes content creators make and how to avoid them.
Biggest mistakes I see them making is not planning for taxes. Oftentimes creators have a lot of income coming in at first. They have low expenses, so they're making a lot of money right out of the gate. They don't think about tax time. The IRS wants their share as soon as you're making your share. Taxes are due as the revenues earned in the business. At a minimum, make estimated payments, starting to set that money aside, 20% of the bottom line from the business. That's why it's important to do the books, get those set up. You're not going to know what 20% of the bottom line is unless you can see the ins and outs of the business. So we see a lot of people who were surprised by that tax bill, don't have the funds to make that tax payment, which is unfortunate. Penalties and interest start applying if the dollar amounts are big enough and it's been too long. Secondly, treating the tax and finances part of the business as something I have to do versus something that I get to do that might actually benefit me and save money. A good advisor or CPA who you work with is going to help you look at these things as a way to save money and move the business forward versus record keeping and keeping out of jail. That's the low hanging fruit of the business that I'm in. But the best version of our business is when we're helping our clients grow their business, see what's happening to their bottom line, keep their expenses tight, help them make decisions about hiring, about saving for retirement, and tax strategies that can propel their business forward.
What expenses can creators legitimately deduct and which ones get people in trouble?
Yeah, good question. Legit business expenses are anything that's ordinary and necessary in the pursuit of that revenue. In the case of a content creator, we have folks who want to make money off of the platform, sponsor deals, or subscription they're requiring their listeners, readers to pay. Anything in the pursuit of that. Equipment you buy to produce the content, the mics, cameras, or the recording studio, contractors you use to edit that content, education you partake in, conferences you go to, travel, use of your personal vehicle. Some creators have insurance for liability or copyright issues. We want to expense that. We have good resources on the website, laundry list, but those are some more common ones. Ones that might get you in trouble is if you have big expenses on your creator business that generate a big loss for you every year. Maybe you're netting against W-2 or your spouse's income. That's going to raise red flags. Oftentimes we see creators put a lot of expenses into their business, buying a vehicle, going on lavish travel, or buying excessive equipment. It's like, why are you running this business? It's running at a loss and it's not producing anything. When the losses outweigh whatever else, that's when the IRS's ears start perking up. It's like, you're taking this loss, which looks like a hobby, and you're netting against real earned income. They feel like you're cheating the system. Outside of that, people who get really aggressive with their salary deduction in an S-election move. Oftentimes creators, once they reach a certain level, will move from sole prop LLC treatment over to become an S Corp. When you do that, you can separate your salary from your distributions. Getting complex here. Sometimes that salary is aggressively low. The IRS sees that as gaming the system. They want to make sure you're paying yourself a proper wage.
Quick pause here. If this episode is making you rethink how your income is structured, that's intentional. Information doesn't create freedom, structure does. At the end of this episode, I'm going to show you how to diagnose whether you're building leverage or just scaling complexity. Let's get back into it. You mentioned that a lot of creators go from nobody to being somebody. When should they go from hobby to business? The moves you were talking about, when should they implement that? Should they implement it when it's a hobby or when they become big?
I think when they are committed to it, when they say to themselves, okay, even if it's part-time, even if it's something I do nights and weekends, this is something I'm pursuing as a business endeavor. It's not just for fun. It's not just, oh, we'll see what happens, but it's, okay, this is a real thing. I'm going to be talking to sponsors. I'm going to be setting up affiliate links. I'm going to be putting subscription buttons up, holding myself out as a business owner at that point. That's when you should start establishing the behind the scenes of a creator business. I'm not an attorney, but there are legal reasons to do that. Separate what you're doing with your business from your personal life. Filing an LLC in the state that you live in makes a lot of sense from a legal standpoint. It sets things up for your CPA accountant to make the moves tax-wise that would be beneficial for you. It's not necessarily an income level or a time period, but when you have turned that switch in your mind to this is a business pursuit. I remember when I first got my first AdSense check from Google, that's when for me it became serious. I was like, okay, I have a check. I have to deposit this somewhere. Do I have a business bank account to go deposit this in? At the time, I immediately went and set up an account at Chase, and I was like, all right, now I'm a business. I'm going to do this thing. Every creator is going to have that moment where they get that check, they make that deal, they see revenue come in. This is the deal. Everyone knows instinctively that's the moment you should start treating it more seriously. More advanced tax strategies, more spending money on the business to manage it You can get away with treating it like a side hustle until the business is making over $10,000, $20,000. What does that mean practically? That means you don't have to spend a lot of money for administering the business, bookkeeping, tax filings, LLC setup. If it's that side hustle income amount, keep it simple. Keep a profit and loss statement on a Google spreadsheet. Always recommend a separate bank account. Once you start getting into the mid 5 figures, it makes sense to set those things up, more of a relationship with a CPA.
A lot of the audience are content creators or aspiring content creators. What does it take to turn a blog, YouTube channel, podcast into a real sustainable business?
There's the creator side of it. You have to create consistent, sustainable traffic and attention for the brand through the channel that you've created. That's easily done when potentially revenue is taking place off of the platform versus dependent upon the views and attention that you're getting on the platform. A lot of creators these days have a service or a way to work with them outside of the content channel. The channel, even if it's a slow drip, can generate a lot of income for the creator because they've got a legitimate business on the back end of the content. If you're just in the algorithm and making money on the platform or through affiliate marketing, it can be hit and miss. You got to get the eyeballs. The algorithm's always changing. That journey is a tough one. You're dependent upon the third party. The more you can set up a true offering of your own, merch, a TikTok shop, your own Patreon subscription or service, that's the stuff that's got real backing where someone's going to continue with that business outside of the content platform. If you get them as a client, they're going to be with you until they don't like the service anymore or you get the job done for them. The more I see creators move away from on-platform business setups, I think they have a better chance of making it long-term.
On the subject of the creator economy, we have this major force disruptor or multiplier, depending on how you look at it. How does the future of the creator economy look like with influencers have to compete with artificial intelligence? How can creators position themselves to win?
Oh, that's a great question. I think real services and business outside of the platform itself, if you're just a talking head that's getting attention and eyeballs and selling advertisement, you're going to go directly up against the AI platforms themselves. The people who are lazy enough to create those are resourceful enough to create AI channels. Some are doing well, some are pretty good. They oftentimes won't take the extra step to set up a real business behind that content. It's purely extracting revenue, ad dollars from the platform itself. As you think about the business, focus on the whole brand. What are you outside of that content? Do you have a school community? Do you have a community platform or a Facebook group? Do you meet people in person? Do you go to conferences and connect with other creators, maybe your fans? Are you expanding the brand off platform so that it's got a real human connection and community around it versus just you in a silo on a particular platform? Think about expanding the brand and expanding the offerings.
What have you learned from building and running FinCon? You've taken your expertise, monetized it through content, built this community, working with thousands of creators.
That's a good one. Business, whether it's a product or service you have, it's better when it's built by people who are going to use it. You surround yourself with a good team who can help you build it. More importantly, listen and ask your customers, clients, the people involved, what they want. When I started FinCon, the first thing I did was send a survey out. What do you guys want this thing to be? In a sense, I already gave it to them. I turned authority to the customer to help me build the thing. The more posture you take throughout your business journey, the better off you'll be. You're going to pick up on things you wouldn't have thought of. You're going to get people involved in the business that are going to help make it special. You're going to have an ear to the ground to serve the client, the whole reason you started it. If it's a selfish, singular, isolated pursuit, it's going to be harder to navigate where things go. Keep the ear to the ground, always be listening and asking. And that's tough, especially when business is going bad. It's tough to ask, why aren't you guys paying for this? Or why didn't you buy my new product? Or why didn't you show up to this thing? Those are tough questions to ask, but you got to keep asking them. If you want to tuck your head in the sand and go away, you can do that too. That's not how business works. You got to keep listening. Always have a way to listen to your audience. That'd be my recommendation.
How can people connect with you, find out more about FinCon and the Creator CPA?
The FinCon is at finconexpo.com and the Creator CPA is thecreatorcpa.com. I'm on LinkedIn most often these days. I do have an Instagram at PT Money. I don't do much there, but a lot of people like to connect there. I'll message you. You can always email me across those different websites. Happy to connect. Happy to talk taxes, events, entrepreneurship. Christopher, pleasure being on with you today, man.
Let's zoom out. If you're a physician, founder, or high-income professional, and you feel like you're working harder every year, but not structurally freer, you're not alone. The mistake isn't effort, it's architecture. This show exists to help you convert expertise into scalable leverage, faster and with fewer expensive missteps. Here's the diagnostic I mentioned before. If your income requires your constant presence, if your capital isn't compounding outside your profession, if your highest value talent is doing low value tasks, you don't have a growth problem, you have a leverage design problem. And if you want to fix it with clarity instead of guesswork, I offer a limited number of one-on-one leverage strategy sessions each month. We audit your income model, capital deployment, authority positioning, and structural bottlenecks, and design your highest return move. If you're serious about compressing years into months, the link to apply is below.